Hi, everybody, and welcome to today's webinar, Building the Path to Funding, Reverse Engineering Benchmarks for Early Stage Startups. I am Ryan Burns. I'm the head of community for the Startup Network, and I'm really thrilled to have you all with us for what promises to be like an incredibly valuable session, really valuable today. At TSN, we are dedicated to empowering early stage founders like you by providing tactical advice, essential resources, and opportunities to connect with a thriving community. Our goal is to help you navigate the startup landscape with confidence, whether you're just getting started or are on the cusp of scaling. Today, we're really excited about collaborating with Jock Fairweather. He's the founder of Community VC, and he's going to be leading this session. Jock's experience is a three-time founder, and his impressive track record of raising over $540 million make him uniquely positioned to guide you through the strategic steps needed to reverse engineer your milestones and set yourself up for a successful future fundraise. If you are pre-revenue, working on your MVP, or about a year away from seeking capital, this is going to be perfect for you. This is going to be a session that's really tailor-made for you. Jock is going to be sharing his insights on how to gradually build meaningful connections with investors rather than diving into high-pressure pitches. He'll introduce you to exclusive templates and tools designed to help you manage and report your progress effectively, as well as stack rank tools to benchmark your startup against investor expectations. And by the end of the session, you'll have a clear path to secure the funding you need when the time is right. Now, as you immerse yourself in today's workshop, I'd like to invite you to explore more of what the TSN has to offer. Later this week, we're going to be hosting a session on founder leadership. That's on Friday. We're going to dive into the essential qualities and strategies that set founders or successful founders apart. Then next week on August 20th, we have our online event, Score More Goals, a higher performance from your senior team, where you learn how to optimize your leadership team for maximum impact. We're also excited about our in-person event on August 20th, which is just an internal event for some of our partnership group. And then also Startup Network. We also have a fantastic opportunity to network with fellow entrepreneurs, investors, and partners at our end of the month pitch night, which is on August 27th. And that is a pitch night that is still accepting applications right now. So if you do have any wonderful ideas for a pitch, please do make sure to send your applications in. I'll provide a link to every to all this as well, just to let you know. And we believe in that being part of the Startup Network is more than just attending events. It's really about being part of the community that's committed to your growth and success, whether it's our signature pitch nights, like the upcoming one on August 27th, or our focus, sessions on emerging technology and health and well-being, which is in September. We're here to support you at every step of the journey. If you haven't already, I encourage you to become a member of TSN. It's an opportunity to tap into our wealth of knowledge, our resources, and connections that truly can make a difference in your startup journey. So thank you again for joining us today. And let's dive into the world of strategic fundraising with Jock Fairweather from Community VC. This is your chance to build a solid foundation for your startup's future success. And then from here on out, basically, if you have any questions throughout the chat, just put them into the chat as we go along, and we're going to make sure to get to them at the end. This is also going to be recorded, so if you have to get up to take a call or grab a glass of water, whatever it is, don't worry, you're not going to miss anything. This will all be provided to you afterwards. But yeah, let's jump in. Jock, why don't you take us away?
Awesome. Hi, team. Assuming you can hear me all right?
Sounds good.
All good. Okay, cool. Here's the prezzo. Is it big enough?
Perfect.
All good. And if I switch like that, you can see me switch.
Yes.
Okay, excellent. Hi, team. Thanks everyone for being here. I'm assuming half of you eating lunch, so I'm pretty jealous. Anyway, this is the first time I've ever presented this like formally. Generally, I help founders do it through our platform and what we're doing. But in a nutshell, I'm hoping to run through this in 45 minutes. It'll be recorded. You'll get this deck. It has a password, which is at the back. We've got an offer for the TSN network as well. And all of the templates and resources are in there as well that you can literally take and use as you please. So I hope you enjoy. Today we'll be running through, obviously, an introduction about us, how to design milestones. I'll give you sort of like a brief run through of how we went about it. I was scared to share a lot of the other companies we're working with, like their internal processes without having to ask them, etc. So I've gone about altering ours a little bit and showing them with you, and then how to report against them effectively. So this is sort of like a bit of the intro. I've been doing entrepreneurial stuff for 18 years. If you Google me, you'll see big wins and big losses, which are all true. Between our founding team, we've made, it would be more than 60 startup investments in the last 4 or so years. I've done 40 or so. And yeah, maybe raise 540, 550 million. So I've sort of been all of the different pieces of the puzzle. And I think it would be fair to say at this point, this includes a meeting I had with a founder in Silicon Valley this morning, quite literally, that this is sort of the hardest funding environment I've seen, period. So basically it used to be cold deck email, spray and pray a bunch of people and money in the account in a month. But things like FTX and etc. happened, and now due diligence, all of the people who invest in funds expect a higher level of DD. And so since events like FTX, the proof of execution and the length of time investors are taking from when they first meet you to when they invest has lengthened dramatically. In the last 2 weeks, I've interviewed maybe 10 investors as a short form podcast. And across all of them, if I averaged it out, the average between when they've first met a founder / seen the deck to when they've invested is approximately a year at the moment. So it's not all doom and gloom though. We're going to run through today something that's like ultra simple, to be honest. It's wild that it isn't the norm. In fact, every sort of tier 1 founder I know, which is down the road a few years, actually runs a variation of what I'm going to show you today. The Silicon Valley founder this morning almost replayed back to me exactly what we do that she does without even knowing what we're up to. So hopefully you can grab some value out of this, use it to your advantage. So the general gist, right, is decks are built in a silo or in your team. And when they land in someone's desk cold or inbox cold, it takes a whole bunch of time from, even if I like it in the first place, without knowing anything about you, it takes a whole bunch of heavy lifting. So I have to be in the right headspace to read the deck, etc. But then sort of 3 things happen concurrently at that point. One is I want to get to know you, and that could be numerous meetings. The second thing is I want to bridge all of my knowledge gaps around what it is that you're doing. None of us, unless we have an ultra focused investment thesis, which certainly is rare in APAC, none of us know enough about enough things to be able to, well, let's say trust everything that you're suggesting is true or validate it. So what we do is we go and talk to a whole bunch of people to fill our knowledge gaps. And then lastly, we're also trying to find someone or some people that are experienced in that space that are also interested to have signal. Now, all 3 of those things run concurrently. And if they do, it's going to be circa 20 hours lift on my behalf as an angel. And it could be up to 3 months crows fly, I would suggest, at a minimum at this point. So the thing to note there is if I was making 40 investments over 4 years and you would funnel a lot of companies to get to 10 each year, you can imagine that across that 20 hours, 3 months crows fly, there's heaps that are dropping off along the way. So you can imagine like the amount of time and lift that's spent. So what we want to do is make it a really light lift for someone to get to know us, to bridge, to build confidence and trust in us. That's pretty obvious. If you literally send me cold an entire deck room and whatever, it's almost like it depends on what my mood is at that exact moment as to whether it goes in the trash or not. It's not that brutal, but you catch the drift, right? So we've been working with founders to help them do this, basically structurally set up and report and update at a specific cadence, etc. And in terms of like the engagement to closing interest, it's come down like seriously dramatically. And I'll give you some examples of that in a little bit. I'm trying not to read all of the prezzo. I tried to write the prezzo, so if you reviewed this in your own time, you could hear my horrendous voice reading it to you. Anyway, so a bit about CVC. Our platform basically allows you to showcase your business in a public profile, which you can share everywhere. The whole idea then is people can come, they can, if they want to see, for example, your pitch deck, they'll have to apply with their email. If they want to see your updates, they'll have to apply again. So you could consider it a bit like Linktree mixed with a dynamic data room. And so the whole idea is, theoretically, you could funnel your entire LinkedIn following to your profile. If anyone's a potential investor, advisor, or supporter, they could engage just by following. So they have to apply, of course, but they can follow along. And then the idea is, as you can see, their intent, the time they spend on your update, the things that you're posting, etc., you can start to engage them and push them further down your funnel. So if you can imagine all of that's going on at the very bottom of that funnel, you start creating some really serious competitive tension, which really is the key. And that's both for getting advisors or investors or getting help, etc. But we can move through some of those examples. This is our profile on Community VC. This is like version 1 of everything we've got, but you can see, you can follow, offer support, you can share it. You have all of these different supporters, all of the different updates you're running, whatever we're offering for help and support, all the different followers, etc., etc. And we can go right into each of their profiles and be able to start engaging with them. The premise is you get all of the data, you see the profiles, etc. Of course, as we're just beginning and the platform's maturing, for the most part, we know a lot of the people internally in the platform. So if we know XYZ is super interested in ABC, we help guide that kind of thing in a sort of manual sense, of course. At the moment, just off the top of my head, we've got 32 companies live on CVC, 4,286 investors and advisors in the database, of which read the newsletter updates, come on the platform, etc. Cool. So what we've learned, we've been doing this like we've been doing a similar methods for, I'm so bad at time. It's 12 to 18 months, let's call it, where we began by running community due diligence. We moved into memos with lists, and now we've moved to the platform. What we know today is of all of the companies, only one didn't reach their minimum funding milestone. Now, funding isn't the only milestone, but I think, it's a key one for a lot of startups, obviously. I don't want to discuss about them, but it was a macro environment issue, let's call it. But what we do know about updating potential investors, advisors, etc., regularly is it helps you stay on track, clearly. So instead of waiting, let's pretend you never update anyone, which is horrendous. Let's pretend you do it quarterly. In theory, you could wait till the 89th day of the quarter and then realize you're fucked. You missed whatever key objective that you needed, which is going to compound into the following quarters. That is, in our opinion, an insane way to work. So a lot of us use weekly updates, which keeps us focusing on track to key incremental growth. Clearly, it develops trust with investment advisors. And anyway, you can read the rest. So we at CVC, like literally as a company, we've been running this for a while. Originally, which is what we promote anyway, reached out to like the 5 dream investor / advisors for us. Then they weren't funds, they're literal people who have the perfect expertise. Engaged them and we're like, hey, this is what we're going to try and do. Can we keep you up to date, etc., etc. And so we did it individually, give us feedback, so on, just really like touch. And slowly we started pushing them into a combined channel. Slowly we started meeting other people who were super interested or potentially interested, and we started nurturing that over time. All just the same comms channel, right? Different layers of the comms. Now, you can read it. I think we got 34. It might be more or less. More. But either way, a third of them are evangelists / advocates for us. So aligned platforms and so on. A third are like incredible global advisors, and a third are investors. And so we recently followed this. We followed literally what I'm prescribing, and I'll demo you today. And we just floated the idea of raising a small round to help us speed up the maturity of the platform, and we reached 200% of our minimum. I did it on Monday morning, on the Tuesday afternoon, and then we started literally collecting the checks on the Friday. So if I compared that to the spray and pray 3 months, I hope I'm lucky method versus what I'm suggesting, it's pretty obvious which one is better. In saying that, there are anomalies, which we'll discuss a little later. But if you just go spray and pray, again, sometimes you're not only up against everyone else, maybe from that day, you're up against the mood someone could be in at that exact time they're checking their inbox. So this is one of the cool success stories we speak about heaps. Anyway, Vita Drop. I think through us, yeah, they did 452 through basically following a variation of the process we're suggesting. They went on to do a CSF. They're still on the platform, but anyway. Cool. So if we begin sort of like thinking about the designing of what we're actually meant to be discussing today, the first thing is who. So this is the first thing we sort of prescribe and talk about, which is finding your true believers, and then using your execution to inevitably convert the non-believers. This is specific to early stage, obviously. Anyone who's attempted to raise money or talk to investors in the room, you know when you speak to an investor and they're unengaged, like you can feel it, but you don't want to feel it. You also know when they're asking you or suggesting completely bullshit or irrelevant things that they'd want to see. So often investors will do that because they don't want to say no. It's just like a not yet. What they're hoping for is like they can't see what they want right now. You've either not asked them or they're not sophisticated to tell you exactly what they would want to see to invest in you. So they'll say something like that. So hopefully you'll come back whenever it is that you might have the wow, and then they might be interested. It's just sort of like they don't want to lose the opportunity. So when you're thinking about it, if we're thinking about for us as community VC, we're like, look, it'll probably start as a marketplace. It'll move into a platform. I'm interested in people who have clearly like ex-founders who have scaled that. I'm interested in ex-founders generally because they understand the problem space and the opportunity and so on. So if I think about it like that, I can probably identify some people who are circa within reach that would be the right fit to be interested and valuable to me along my journey. So that's really where we start, right? And again, sure, you can meet investors. If they don't seem to vibe, they don't seem to be interested, you can keep them on a nurturing list, that's fine, but don't overly invest. I'll dig a little bit deeper on each of these when I do the demo in a sec. The next thing is understanding and thinking about sort of what they're looking for in you and how they look at different deals. Now, any investor basically period that's worth their salt has something of a variation of what's called a stack rank. So there's a bunch of things I'll say that I'm assuming a lot of people here know, but it's important to understand that in a sense, every single company is up against every single other company that's turned up on that investor's desk. And that's just sort of how it is. An investor's job is to deploy capital in the most effective way. And so it's really important to understand what you're up against, who you're up against, potentially. But more importantly, what are the things that really make that investor tick? Again, all of these links are at the back, but here's an example of a stack rank. I used to literally run this live. It's how we originated Community VC. I used to run my entire investment pipeline live, and anyone could access it and see how it progressed. All the links aren't, you'd have to request, of course, but you can see this entire stack rank is color coded: red for bad, green for good, yellow for whatever, orange for find out more. And you can see on the side here, all of these, these different things. Down here is where it gets sort of like to the real bits. TLDR, why it could be one of the best opportunities you see in the next 10 years. The bet, the wow, could it generate 1,000x? All of these kinds of things. These are in literal order of how I used to look at deals. And you can see I write the notes and I color code them, etc. So point being, so I clearly tried to block out the names. Down the bottom, you start seeing, we start comparing we've got all of the qualitative and all of the quantitative comparisons here. And you can basically begin, there's return ratings, et cetera. You can begin to literally compare who it is that you might be interested in investing in. Of course, there's always like heart involved, but nonetheless, everyone's doing some variation of what I just showed you. So it's important that it's your job to figure out what they want. I met a founder recently, very recently, who's raising money and has gone to a bunch of different investors. And I said, what's the objection? What's the feedback? What's the whatever from who you've spoken to? And the answer was, they've all said, get revenue. Okay, it's a pre-seed business. What does get revenue mean? Does it mean get $1? Does it mean get 1 million? Does it mean run some services on the side of your product to get any revenue you can? Does it mean get enough revenue as a penetration of your core ICP and your beachhead to show that there's actually some momentum? What does that actually mean? When I hear that, it demonstrates two things. One is all of those investors are just stringing that person along. Two, the founder was not, hadn't been educated, hadn't been educated to figure out exactly where they were heading. And I think that's super important because exactly as I said, is it $1? Is it 10 million? Is it whatever? What revenue is going to give you the best shot at getting that money? Cool. And then from there, again, I will demo this, but if you talk to these investors, let's say it's your cool 5, and you've got a variation of the things that they're interested in, looking for benchmarks, etc., you can simply reverse engineer that, right? You can reverse engineer that into key milestones that you'll need to hit in order to do so, which should, in theory, layer down into your revenue hypothesis and layer down into your cost hypothesis, right? And now, sure, everything changes, we know that, but at least you've got blocked, let's call it quarterly milestones that you're heading towards, so you're not just steering blind. Because it's always possible that you get a core believer like Vicky and I, who are very sort of startup believer types. We buy into all sorts of heartfelt shit. And you get our money, which means you can keep going. But what happens is you get to where you thought you should have been for your seed round. And now you're at a point where you're running out of money or run out of money, and you haven't reached anything of whom your potential seed funders would have thought was impressive or valuable at that point. And you can't imagine how common it is. I hope that makes sense. Cool. And then lastly, this is just like a hack screenshot, but in essence, one of the core things that goes on and on and on is you get, well, often you don't get investor updates from founders, which means generally they're fucked or they're hiding something. Often when you do get them, they have no context at all. And so the update says, yeah, we sold 2 packs of whatever we're selling. And like, for the most part, I mean, this is from investor calls that I'm having too. They just get binned. And the point is, there's no contextual nature to it. And so, yes, I made 2 sales, but in order for me to understand whether that's actually good or not, or you're blowing smoke up my ass, I need to go back to the deck you originally presented me and look at what you were attempting to reach to see if 2 that month was actually good. Does that make sense? You can't build trust. You build negative sentiment by doing things like that, to be really fair. Sorry for all of the swearing. I just get passionate about this. Okay, cool. Let's do like a little walkthrough. Again, I've blanked out some things and shortened some things because in our profile, we have even competitors of ours or whatever, potential competitors of ours sniffing. So trying not to show everything, but we are building out in the open. I will address that in a sec. So if you talk to Folklore, who is like, for me, in terms of the way that they look at deals, that Folklore's from Australia, and the way that they perform their DD, it's tier one. Not tier one, they're not one of the biggest funds, we know that, but in terms of the way they go about it, if you spoke to them and then you spoke to someone like Tim, Noakesmith, founder of VOW, you might have heard of it. It's sort of one of Australia's darlings, raise 100 mil, etc. We spoke to someone who runs like a top tier syndicate in Australia, like Jason Ming. If you Googled Andreessen Horowitz, all of them talk about and think about how founders could be maze runners, or in other words, how astute are they at forecasting the future and reverse engineering everything they need to achieve to make that possible in a really pragmatic way. I will show you what that looks like in a sec. Because when an investor meets you, sure, like they like CVC, they like Jock, whatever, they can see whatever the end state vision is. They can see those things because you're presenting them. But what they're trying to do in the stack rank and the demonstration is bridge that gap, right? So they want to see how you're thinking about it, your thought process, how focused your decision making is to the end state, etc. All of this and demonstrating it is super, super important. So again, step one, you go for your dream team. These on here, 1, 2, 3, 4. 4 of 5 of those people are dream seed investors for us, like literally dream. So the first thing we do is we reach out, get to know them, get to know what they want. And like I said, we embed them into our milestones. The next thing is we talk to them about the exact benchmarks. So from that group plus one other, at the point of June this year, I think it was, the benchmark for companies that we wanted to get the val and the raise of for our next round was a 2 mil raise at a 10 mil val. Now, if we wanted that for our next round, we would have to be in the vicinity of 600K ARR. That's where they are, like the best company as of June this year that mostly everyone had seen was there. And so that means wherever we're heading needs to be there to try to guarantee our next round. We got feedback on, so this, we reverse engineer it. We got feedback on particular engagement metrics, which were comparable to Airtable, which is what we were suggested from one of our dream investors, and a specific quality of pedigree of customer to demonstrate something else without sort of giving everything away. So we took from 4 of 5 of these different people and some others, all of the things they were really looking for. And in terms of what we produced, we went about layering it and forecasting it. Probably won't give a template to the forecast, but you'll see how I layered it in one of the next slides. So these are all true, but they're like, each of these, 1, 2, and 3, are a third of the length of them. They're just demonstrating how we do it in our FAQs. You can show the way that you think acutely to these investors in terms of the way that you reverse engineer what you're trying to achieve. So you guys can read it in your own time, clearly, but it starts with the reverse engineering of the vision statement and the core things that need to come true to achieve that. What exactly needs to come true for the vision statement to work, and then how we've approached it in this way. So if you can layer those 3 into each other, of course, as I said, things change. You're going to have to run heaps of experiments to prove a lot of the different variations true and false and make iterations. But the point is, you've been extremely thoughtful and you have a way to approach what it is that you're doing. You're not just winging it. Particularly in this funding environment, everyone is hyper scared of founders just flaming cash on shit, basically. Everyone wants you to get to default alive as quick as possible. Everyone's scared of flaming cash. Now, you can Google this. I originally learned this, I think it was from Andreessen Horowitz. I think they call it like the risk onion. And it's basically like every round that you raise, you can allocate a dollar spend to the hypothesis you're trying to prove. It's really interesting. Now, this question could come up. Things change, right? We have a vision, a dream. That's the point of founders. What is just as important as proving hypothesis true and going on that journey is demonstrating that you figured out that that hypothesis isn't true and you've got a new step or journey to keep moving forward. Investors have positive intent around that kind of thing. When you, again, the famous pivot word, right? If you wait and you've burnt 12 months of the 18 months of cash, or maybe it's usually worse than that, it's like 15 of 18, and then you talk to the investors and you're like, yeah, we need a pivot. Like we're not a whatever anymore. We're not a plane company anymore. We're a car company. That's basically when shit hits the fan. And the premise of why shit has hit the fan is because you haven't incrementally been focused. You haven't incrementally been updating, which means you can't ask for incremental help and support along the way. If you wait right till the end, well, you might nail it as possible, but for the most part, shit hits the fan. Cool. So how do you layer it? I'm not going to go into like literal operational execution today. We could do maybe another workshop on that. But also I'm not the best operational guy. It's my partner. But either way, I've cut a bunch of things out here and changed a bunch of things. But in a nutshell, you can see how I've run. Can you see my mouse moving? Yep. Here we had like, it's a quarter. These are sort of like large milestones or sets of 3 milestones. And in between are smaller activities. And these large milestones generally correlate to a significant change in either revenue or cost, right? That's all hypothetical. But point being also, you've done a lot of thinking. I've done none for you today. But all of this, if we kept layering it out quite literally, would follow this to this, which is 600K ARR. It literally follows exactly. And so the art of doing milestones into mini milestones, into revenue hypothesis, into your cost base is really important because basically it shows you how thoughtful you're being of your approach and how proactive you're being about your approach. And at this point in time, that's ultra important to basically everyone who's investing. Cool. So let's pretend you figured all of this out, which I realize is quite a lot. In its simplest form, in terms of raising money in this environment or reaching a milestone in this environment, what you can do is create a shareable environment of whatever you're doing, report against the milestones, start sending all the potential investors, supporters, and advisors to whatever environment you've created. As you see more engagement from them, invite them to support, invite them to engage with you, etc. And as you see more from that, start getting closer and closer to them. Inevitably, the point is to get as many eyes and get to the highest quality ones, like the highest quality ones as possible, and to create that competitive tension. There is a caveat, again, which I've touched on throughout this presentation, which is you have to execute, basically. That's sort of like a key component. If you're a founder that doesn't like executing, well, I don't know what to say. And as part of that, being transparent and asking for help is super important, and it works. People like helping. Like most people are in the startup environment because they respect the founder's journey, how difficult it is, etc. And they want to help and they want to see whatever it is that you're doing come to fruition to make the world a better place. So you can create your own environment, whatever you want to do, of course. But the premise of everything that we're building, the platform, is around capturing all the qualitative and quantitative signal around what's going on in terms of, sorry, Maddie, I see you're in this call. I've used you as an example. Yeah, so anyway, capturing all the qualitative and quantitative example. So first thing, you can make this public profile, of course, start sharing it around. We do lots of hacky things, of course, like running pitch events and all sorts of stuff to support. But in a nutshell, that drives to the profile drives to particular updates, etc., where we start gathering feedback and you're seeing who's doing it, who's engaging, who's following, supporting, etc. And what it does inevitably is builds up your FAQ base around your business. And it gives people an insight as to how, I don't know, I'm bad at English, but how you rebuttal things, how you address certain issues or objections that are coming up, and how effective you are at thinking, iterating, readdressing them as you keep progressing. Of course, as you post updates, we have things like notifications, etc. So you can see who's looking at your staff and so on and so forth. And you can go into their profile, see exactly who they are, what they're interested in, etc., and start leveraging that. Again, we're early days, but we've kept this rather curated at this point. And for the most part, we would know practically everyone or close enough to everyone in here. So if Laura Daly's looking at Matt Forrest's business, I could suggest, we could certainly suggest the profile would, the ways Laura Daly could support Matt in terms of advisory around growth marketing, but also Matt's business, from my knowledge, probably doesn't need growth marketing. So anyway, we lend lots of support in that way. And then what you do, as I was suggesting earlier, is you start creating competitive tension. In your profile, you can see who's engaging and looking at whatever it is that you're presenting. And like I said, internal of our channel, we could literally see competitive platforms to us and to each other looking at all of the things we're doing. So you can imagine how we could use that, not in a conniving way, but how you could use that to create leverage and momentum in the round that you're doing. Same thing goes for, theoretically, if you've got 2 growth marketers in your as your supporters, or 4 or however many, and you need support with growth marketing. Technically, you could ask for help or offer a job opportunity, and you'd have 4 people who have been on your journey, should understand you intimately, or at least you'd see their journey and intent with you, and create competitive tension between them. So you've got 4 applications of the best possible people who are super aligned to what you're doing to help you in a fractional way to execute what it is you want to execute. So I just need some water quickly. How am I going for time?
We're looking good. Yeah, keep on going. Maybe like 10 more minutes or so. 5.
Or I'm going to run out before that.
Right.
5. Cool. So recap. Firstly, don't fly blind. And I thought, in case we ever ran this again, I would attempt to tell you, as of July, August this year, in terms of a lot of deal flow, deal doers, whatever I know and have seen, what the best pre-seed company right now that we saw, what some of the key highlights around them were. So you could take this away and you can read it anyway. The base tech was built. They'd sold 8 of their SaaS at a scalable price, delivered with the right gross margin, so they weren't sort of servicing it, and they had really strong validation of their broader go-to-market, like how they acquired those 8. Again, I'm trying not to say too much because I'll give them away. And then the best seed right now was MVP plus build. It was 650K ARR, $1 million in companies deep in their pipeline. And they already had a lot of validation of what their custom technology would be. So they built everything on third-party stack, which is often what you should do. Not always, but often what you should do as long as possible before you've validated everything before going and building a lot of expensive stuff. As I said, there's always anomalies. We are not suggesting it's binary. You would use us or use this method and not ever spray and pray investors. We're suggesting, of course, that you would. But if the investor ever wanted to quickly build trust in your execution, they could hop on and see it, right? So you try to shorten the horizon, the time frame. Sometimes you can spray and pray a deck and get lucky. You would have seen like the Square Peg deal with the xCloud Guru guy. I mean, it's pretty obvious why you'd back the xCloud Guru guy. He's made a $2 billion company just recently, but also Blackbird backed a literal teenage CEO. You can see those commonalities, but I think what's important to know as well is that Square Peg will have known and been watching the Cloud Guru guy for a long time. And I know for sure Blackbird has been watching that teenager for a really long time. So you can spray and pray, but even in those instances of incredible humans, it actually wasn't a deck spray and pray, land on the desk cold. It hardly ever is. So next steps, if you wanted to play with us, we support the companies on trying to meet their dream team supporters, getting all of their info and reverse engineering, and starting to report on that. Of course, some people have a lot of this, so they can just hop on and get going. One of the things that comes up often, if you're trying to raise money within the next very small period of time, you're already down a heavy lifting path, and you should continue doing this until you've completed the round. We would be valuable to you after that. If you're, let's say, 3 months plus out from raising, even a year, there's basically no such thing as too early. I originated this concept, which again, lots of tier 1 founders do, 12 plus months ago with those 5 people. And we turned it into 34 of like the most perfect humans for us possible. And that's what made all of what we're doing possible. Again, you'll get this deck. We'll figure out the comms and etc. after this, but all of the links to the different things are in here. You can see we do hang out with the investors and we do ask them what they want to see. We've got the update templates as well that you can use, basic ones, the stack rank that I showed you as well. So you can see, at least how certain people judge and what's been out there. If depending on the feedback as well, we could run, in theory, if you did all of what we suggested today, you should have as well it linked to broader horizons you're trying to achieve. So that's beyond this round. So it's sort of like this round, next and next. A lot of people call that a venture plan, and how that correlates to your cap table, i.e. like how much money you could raise, when, where, for what your dilution would be, etc. We could do something like that. It would take me a while to prepare. And of course, like execution, best practice. I'm never going to run anything on like idea validation or whatever. Some other people can do that. And then, yes, of course, because you're part of TSN, we do like the launch program, which is Dream Team, reverse engineering milestones, how to report for $999 upfront. And then the companies pay $99 a month. We do have like an enterprise version where we do shitloads of hand-holding and brute forcing the success. But this is sort of like our base version. And at this point, we're bringing everyone in on batches. So it's on the 20th is the next one. We literally have 3 spots left, unless there's sort of shitloads of people we can figure out if we could do 2 at once, etc. And if you press claim offer, you'll just, so that you know the agenda, you'll land here. You will have to put some of this stuff in, and your code's already here, which will get you the discount, etc. And I'm sure we'll be in touch.
Amazing, Jock. Nice job. Thanks, May. I know that Ryan probably has got a few questions coming up, but I just wanted to just chime in because I've been on your platform for a while, and I just wanted to let people know what Jock's created in regards to validation questions and just digging deep into your organization. It's such a great validator for you as a founder to know that to know your own stuff, to know your metrics, to know what you're trying to achieve. And sometimes you don't know what the VC is looking for and what the metrics or the due diligence process is for each of those VCs. And so Jock's created something that allows you to see and understand all of that. And I can't tell you how powerful it is to get that stuff set up really early on your founder journey, so that as you start to grow, as you start to build, as you start to get customers, you've got the original benchmarks, you've got the original targets, you know where you started from, rather than going down the road and then 6 months, a year into your journey, all of a sudden you start measuring those metrics. Well, you don't know where you started, right? So for you to be able to prove that great growth that you've had, you need to have those metrics set up to begin with. So I can't validate enough how good what Jock's created is for early stage startups. And I think there'll probably be heaps of questions. And thanks so much for your presentation, Jock. Appreciate you.
Yeah, I would agree with Vicky. It's something that we both got, I would say, audibly excited about when we started hearing about this idea, because I come from a VC background, and this is what investors crave, is this idea of like a way for them to see deal flow in a way that they can consume it. Like Jock said, based upon their mood, it would be crazy. Some days an investor would want to look at 500 pitch decks, and another day they wouldn't look at any. It would just depend on who got contacted back based upon the whims of somebody's mood that day. So I highly suggest taking advantage of that offer. We definitely have a couple questions in the stack, Jock, but they're a little bit light, I would say, in terms of just the questions. But one main question I had would be, if up in Brisbane, I guess, if you wanted to maybe bring this presentation for an in-house for those up at the precinct, it looks like David would highly suggest that if you were able to bring it up there in person, because people that can't attend the event today. But I will say, David, that we are recording this event, so anybody that you want to share this with afterwards, it'll be on our YouTube channel. But we do love the precinct. We hosted a pitch night event there last year, actually, around this time. And then we did have a couple questions about what you meant about a deep pipeline. I thought that perhaps meant like a sales pipeline. Is that correct, Chuck?
Yeah. So yeah, it does. It means a sales pipeline. I mean, in a nutshell, anyone could fudge having 1 million people in the pipeline. When I meant deep, it's kind of like whatever their process is, obviously, it's people far down the journey. So it's not like just it's been an inquiry. It's like an inquiry plus qualified.
Great, excellent. We still have a few minutes left. Does anybody have any questions off the top of their head they want to ask? So you can either put it into the chat, or you can feel free to speak. This is
unmute yourself and
speak. An open session.
I can hop on with a little point of view from my side, if you can hear me.
Yeah, go ahead.
Yeah. First of all, thanks, Job, thanks, Ryan, and thanks, Vicky. It's a very, very valuable session. Just sharing our experience here. We've been bootstrapped for more than 5 years, and when we started working on attracting investment, it's been almost a year, and it haven't worked yet. And we were always seeing that the problem goes back to the fact that the VCs do not understand us well enough. And we found out that our problem that we're solving is multi-layered. And so we just started changing our strategy about a month ago, and we already can see how this is changing the direction of the investors. So we're going with a, let's say, a mixed family and friends and angel round of about 200K, and it is almost all subscribed to right now. And yeah, basically, what Joe presented is the methodology that we figured out will work the best. Starting with, giving a general idea about the business, and then, peeling the onion a layer at a time, so that we can bring up the knowledge and the narrative to the right level where the investor will say, oh yes, this is a very good thing, because we were seeing with all that cold reach, we're not ending up anywhere. But when we sit with someone for, let's say, 2 hours, which is quite, like unusual. But when we sit with someone for about 2 to 3 hours, they give us like time generously, and we talk about the problem and we peel the onion for them. They become very, very much interested. But yeah, you cannot sit for 3 hours with everyone. And so building this knowledge, building this rapport, I think, and building the narrative is the best way to attract investment, keep investors, or keep yourself at the investors' mind, and as well keep yourself true to your commitments and what you're trying to achieve. Basically, self-validating yourself against the promises that you're making to investors, and that is also a very valuable thing in your startup journey. So this is all what I've got to say. Thank you very much.
Thank you. I couldn't see who was talking, but I think that's awesome job. Congrats, by the way, of going about it that way and making it work. I think like an important point is also if you also spend some time figuring out who might do seed type or whatever the next round type investing in you is and what they want to see, you don't have to project to approach all of that, but at least you'll know that as you're progressing and you get closer to, let's say, safely getting towards the end of your burn, you'll be able to figure out if you are close enough to what that potential investor said at that round would look for to bother, literally bother, or you can make, if you're doing it pragmatically, you could figure out early enough to know you're not going to raise that money at all and figure out what you're going to do to make this a profitable business in itself, which is there's no problem with that. That's obvious. But it's better to do that than to turn up after burning everything and you're in a lot of trouble to go, well, no one's going to give me money now, so we'll just shut it down, right? Or we'll try and sell our IP or whatever might happen.
Yeah. No, very true. Thank you.
We have a question as well. It says, at what point of success do founders leave community VC and continue their own journey independently? I guess you've not got there yet because you haven't been that long in market, John.
Okay. Well, I think in theory, if you could use us for 0 to pre-seed, pre-seed to seed, and then seed to A. When you get to A, you're moving to, I don't know what, whatever people use, Orchestra, or I don't know what they're doing. Where
consulting.
The theory is when you're there, chances are you've already got multiple deep-pocketed investors that are the point of them investing in Series A is they're going to try and take you to the moon or the promised land of whatever that is. So you don't need to funnel new investors and et cetera, anymore. I think at this point, we're actually on Monday, we released today. If a founder with us has raised money, which lots of them have, there's a low utility requirement for them to be on our platform. And that's because VitaDrop is a prime example. if he's, I actually don't know how many it is, but call it, he did the private and the public raise, so he might have 250 investors. He wants to invite all of them and figure out how to leverage them to be better evangelists and warm them up for his following round. Like, he wants to do that, clearly. But on Monday, we release the new permission sets on the platform, which means all of them could basically be nurtured in the right way. If we let them all on the platform now, it would be a fucking mess, because, you know, they could do all sorts of things we don't want them to. And there could be people with competitive nature trying to get deep down the funnel of Matt from EcoHoist, you know, and we can't allow all of that. So we've been sort of very pragmatic about what companies we're letting in, but also which experts, advisors, investors we're letting in too. And we hope to, as the platform matures very, very quickly, to start expanding that. In saying that, it's still, the distribution is, for the last 18 months, we've got, whatever I said, 4,200 something, 80 something investors and advisors. So you get that as the added benefit, the visibility with them.
I have another question on that. You know, from a crowdfunding perspective, obviously there's a lot of the detail and the data that you're asking founders to complete will be really valuable in the crowdfunding space too. And I know that there's quite a lot of conversation at the moment about the amount of due diligence that goes into the crowdfunding and how robust that is. And then the follow on from somebody who's crowdfunded for their first round and then want to go to a VC for the second round, often they don't have those due diligence and metrics set up. So is there an opportunity for this to also be partnered with the crowdfunding platform so that you get those metrics set up in your business early enough?
Yeah, there certainly is. I just, as a caveat, we are completely and solely founder focused. And so everything we do and everything we build and are going to continue building for quite some time is how to enable founders to attract, nurture, and engage potential investors, advisors, and evangelists in the most effective way. And any effort or brain space we put into, let's say, hypothetically, white labeling for a crowdfunding group or whatever, is taking away from actually what is meaningful to us and to everyone else. Yeah. In saying that, we have already validated that it works wonders for crowdfunding. We did VitaDrop, that's one, obviously. But we've also done, when we were doing a lot more content, we did some hybrid community feedback on crowdfunding campaigns. One was Grow It Local. We did two more, I've forgotten the names. But basically we got their CSF offer.
Yeah.
I sent it to all relevant people that I knew, experts, investors, etc., in that field, collated all of the feedback and did a live review with all of that for that founder in a constructive way that not only helps the founder, but they promote that to give all of their potential retail investors confidence in the fact that what they're approaching, how they're approaching, whatever makes sense, and they're not being duped, if you will. So we've done things like that, but at this point, a lot of opportunity, but we're caring solely for founders.
Yeah, great. Awesome. Thank you. We have a question from Lydia as well. She says she hasn't got a mic, but she's wondering if you have personally noticed any advantages from being face-to-face with a potential investor versus meeting over things like Skype.
Nah. No. Honestly, blank face, everything is Zoom or whatever now. Yeah, nah. Go with the Zoom. Just get it in the meeting and in any which way you can. Basically, the answer. Yeah. I mean, I'm sure there is, but that's, I don't know. It would be hard to get me out of the house. It is hard to get me out of the house.
Yeah, I would say, in my experience, I would say 90% of the meetings were done virtually. And then they only meet face to face for the pleasantries at the end. Probably just everything is done virtually all the way up until then. It's almost like an iceberg. Like everything is down below the surface. So yeah, we are at time right now. Did anybody have any other questions that you'd like either to send over If not, don't worry. I'll have an email go out to everyone with our contact information, and also hopefully we can we'll get Jock to share the slides as well, so everybody can take a look, and then some information on that offer that we all talked about. It. We hear a lot about offers and benefits and perks in this startup space, but this is one I would especially encourage you folks to take a look at. And that's not just because we like Jock. I really think it's super valuable, and it's an area that we haven't seen anything like this. It's kind of, I would call it a game changer for a lot of other people. At the very least, reach out to Jock if you have any questions, or ourselves at the TSN. But yeah, thanks so much for joining us today for your Tuesday. Hopefully you have a lovely day. On Friday, we have another amazing webinar about finding your how to fill the boots of a leader, basically, and fill that leadership role with tenacity and intent.
Courage.
So yes, can't wait to see you all again. And then if you do have a chance, please join us at the end of the month for our pitch night. We do have applications open. I put it into the chat, but I'll send it out for everybody to apply to that, as well as $200,000 worth of prizes. Should be very, very good. Yeah, thanks so much, everybody. Have a nice day today.
Thanks, everyone. Bye.
Thank you.
Welcome.
Have a good day.